Quick check-in as to what the level is on the frontline index at 19,648. You've got the broader markets pretty much neck to neck. P N Vasudevan is the MD and CEO at Equitas Small Finance Bank and now joins in to talk about the fine print of the Q1 numbers. Thanks much for taking time out. Let's start off with the net interest margins. They've fallen below 9%. Is this just a temporary blip? Do you think that things can stabilize to around 9% as was earlier guided by you?
See, the cost of funds, as you might have noticed, has gone up in the first quarter, and there's a proportionate reduction in the NIM also. We expect the cost of funds to go further up in the next few quarters also, because many of the old deposits are getting repriced at the higher rates now, current rates. So we should see the rates, interest rates going up further in the next 2-3 quarters. Which means there should be a proportionate impact on the NIM also. We have been able to increase our lending rate over the last 1 year. It's almost, we have increased our portfolio yield, disbursement yield by almost 0.5%. But the impact will still be there on the NIM. So what we expect is that our cost of funds might go further up from where it is currently by nearly about 40 to 50 basis points, and so NIM also should come down in the same range of 40 to 50 basis points. Last year, we had a NIM of 9%. This year, for the full year, we expect it to be around 8.5%. So from 8.75 in the first quarter, it may go all the way down to about 8 quarters by end of the year. So that for the full year, we may probably end up with an average of 8.5%.
Okay, so NIM is around 8.5 because you're seeing cost of funds go up going forward. But then what are the levers that you see for NIMs to stay around that 8.5% mark as well?
Yeah, by and large, yes. Because as I said, our disbursement yield has actually gone up by 0.5% over the last 12 months. There's also, you must understand that there's also a product mix change which happens in new and startup banks like ours. There's always a product mix change also, which again does have an effect of decreasing the yield. But yes, broadly speaking, our NII growth should be driven largely by the disbursement growth over the next few quarters. And the NIM itself should, as I mentioned, probably go down to 8 quarters by end of the year. But for the full year, we are talking of an average of about 8.5.
Okay. Now, you are well above your growth guidance. What is aiding to your growth and what is your sense in terms of sustainability? And if you are above your growth guidance, which you must have given, because market conditions were different, could you be revisiting your earlier guidance?
Yeah, absolutely. I think our deposit has been coming along very well, and our retail term deposit, actually we had the best ever quarter so far as a bank in the first quarter. So the deposit growth has been quite in line with the advances growth, and we don't see any particular concern from the deposit side. Of course, you might have noticed that our CASA ratio has come down. CASA in terms of amount remains flat Q on Q, as a result of which the percentage of CASA has come down. But that, I think, again is an industry-wide issue, because the interest rates on deposits are so attractive today that customers, depositors do want to take away as much as possible and lock it into a term deposit and earn a higher interest rate. So we also see a significant flow from CASA from savings to deposits. So our CASA percentage has come down, but overall our deposit growth has been very much comfortable to support the advances growth.
Okay. And how should one look at ROAs therefore? Because the net interest margin pressure is expected to sustain. You continue to maintain your ROA guidance of 2.25 to 2.3% that you maintained last time?
See, basically we will try and see whether we can deliver around the 2% level. I think that should be our focus for this year. About 83% or 84% of our loan book is actually on a fixed rate basis, which means that obviously in a rising interest rate scenario, then our portfolio is the one which will have the largest impact of NIM. Given that scenario, I think for the current year, we should be it should be a really good performance if you are able to deliver anything in the range of around the 2% level. And then maybe next year, when the interest rate cycle generally is expected to kind of start stabilizing and reversing, that's the time when you will see that portfolios like us will actually start seeing the the benefit of a larger fixed rate loan book. And so we might get back to that slightly higher level of ROA maybe next year. This year, I think it will be a challenge and it will be a good challenge if we can manage to maintain it around the 2%.
Okay, and Mr. Vasudevan, before I let you go, can you give us an update with respect to the universal banking license? What's the timeline for that?
We had a regulatory licensing condition which had to be met by merger of our holdco with the bank, which we have done in the month of February. And so technically now we have kind of cleared all the conditions of our license. So we are now technically qualified to look at applying. So we'll be, there should be some kind of a guideline. Probably the regulators may come out with at some point in time as to what basis a small finance bank can apply for a universal bank license. So they might probably put out certain conditions of such conversion. And as and when that comes out, we will have to study from our side whether we meet all those conditions. And then if we satisfy those conditions, then we would definitely be keen to apply. In terms of timeline, obviously, there's no particular defined timeline at this point in time. We have to just take it as it comes.
Okay, Mr. Vasudevan, on that note, we'll let you go. Appreciate you joining us on the show. But let's talk about Kotak Mahindra Bank.